Good morning, everybody. It's Christopher from Serene Education with the 4 Majors Analysis Update for the 3rd of July 2012. Hi guys, I've just plotted, I saved yesterday's chart on the Euro US dollar, and just want to show you what price has been doing since then. So we had a look at the weekly, and we knew yesterday, just by looking at that, price was trading into the underside of the prior support and resistance. This is the breakout that we saw here. Going through the latter part of May and then into early June, we saw some buying sentiment on the market, and price was consolidating, that's the right word, under a prior breakout or support. Okay, if I just zoom out, you can quite clearly see on the Euro US dollar, September of 2010 through January of 2012, a clear support area here, this 1265, and just recently we've seen a break of that on our weekly. And for the past month or so, price has just been pulling back to the underside and failing to break and close higher than this area. This week in particular, we've seen price reattempting these highs. However, you can see price is now trading lower at the lower end of it, and hence the reason why the actual candle on our weekly is looking negative. A lot of indecision candles here. The past 3 weeks, very indecisive. A lot of wicks, a lot of buying one week, then a lot of selling one week, and then a lot of buying one week. So a lot of indecision. If you had to take and put all these candles together, you would have an indecision candle, because the body of the candle, we took these 3 weeks and put it together. The body of the candle, there's more action happening in the middle. So that would be, if I can just get this right, this would be your body and that would be your wick. So you have an indecision candle at the underside of a major resistance, which happened to be prior support. So you'd want on your weekly time frames, in this case at 3 weeks, to have a decision candle. Now you can quite clearly see on our weekly that the overall trend is negative, and most importantly, our institution moving average, as well as all our moving averages in this case on our weekly, are above price, acting as a ceiling, and hence the reason you can see my trend line, for example, is above price, and you can see the direction of the trend is down. So price is trading below a major support and resistance level at the underside, and it's likely to be a new resistance the longer it goes, the longer it fails to actually break this. Then ultimately what we should be looking for is a bearish engulfing or an exhaustion candle at the underside of 1265 to look for a potential entry for the downside to be the overall target. Okay, so if we do see that happening, where are we likely to go to? Well, ultimately our target realistically would be roughly around the 11,950 ish mark, which is something we saw, support we saw back in May, June of 2010. Okay, so that target is some way off. Each increment over here is 100 pips, so there's 100 from where prices to 125, 100, 200, 300, 400, 500, 600 pips, guys, to the next target if we saw that occurring. A nice bearish engulfing here, an exhaustion candle, one with a long wick, but with candle still closing lower, or engulfing this indecision here, this whole 3 week of indecision here, a nice bearish engulfing, a candle of some sort with very little wick, but a lot of confirmation, a lot of conviction to saying, listen, yeah, this is now clearly a resistance level, let's be looking for the low side. Ultimately your first target would be this little support over here that we saw on the pullback here, roughly around the 12400 mark. If you would like to see that, I mean, that would be generally a first target because we've been there in the past. Then the second target would be that one all the way down there at 1195. Okay, so on our daily, as you can quite clearly see that 1265 is above us. As long as price is trading below that, then ultimately it's still looking negative. You can see on our daily, these highs, these attempt highs are getting lower. That one's lower than that. This exhaustion candle at the underside, great opportunity to get into that on the hourly time frame. Beautiful entry here, an exhaustion candle at the underside of a major resistance level, and price actually sold off to the next level, or the prior support, which was down here at 1257 on our intraday charts. And you can see for the past number of hours, support now being found above the 1257, which happens to be the institution. And as long as that maintains, then ultimately we could potentially look at another reattempt of this 1265, or this little intermediate trend or intraday trend line being tested, and ultimately failure with a chance of the 1257 being reattempted. Ideally, if prices to continue to fall, then we're looking at 12.53 as our ultimate target, back down here towards the institution moving average for an intraday time frame. And below that, we can go all the way down here to around about the 12.42. So we have two distinct targets on intraday charts. Notice the CTC is blue, however, we're still trading by the institution moving average, and as long as that occurs, then ultimately on our intraday time frames, price is starting to look a bit positive, but we're still below that 12.65, guys. So if there's going to be any positive buying opportunities, it's going to be to this level to start with. And then you can take profit on the table and then wait for a confirmation break to the upside, a genuine support being found, and then we could look for a second entry for further upside movement. However, we don't want to be buying into a major support and resistance level with the outlook that it could potentially turn on you. So if you are doing a short-term trade, it's got to be in and out really, really quickly. Moving on to sterling, let's have a look and see what's been happening on this pair. Okay, so yesterday's candle, indecisive, spinning top, more action happening at the top end of the 50% of this entire, more happening above it here, roughly around the 70-80% mark of this entire trading week yesterday, which is imperative if we are likely to see any further extensions to the upside, but that could be well capped because of where price action is stalled in the past here, roughly around the 1575 mark. Clear resistance here for a full week, and both consolidation on the support side as well as the resistance side, early May or late May in particular. So this particular pair capped by a major resistance level, and you can see yesterday's indecision going into this area here, something to be well aware of. So if you're looking for any upside trades, yes, there could be potential for further extensions to the upside, but it could be very tight because of this very strong support and resistance level above us, which includes that institution as well as the 50% moving average. To the downside, we know that we've had a major support and resistance here at 15,300, and this goes back a number of months, years in fact. So a clear bounce above that. Ideally, if this is to continue to the upside, we do need to see this 1575 being breached soon, and then we should be looking for long-term targets to be at least back up towards that 1600, another psychological major support and resistance level, going back a number of months in particular. So as it stands at the moment now, you can see from all the selling that we saw through May right through to the beginning of June, if I can just put there my February tracement, you could see if the longer price pulls higher, we should target potentially these February tracement levels as targets. So you can quite clearly see here the 23.6 was the first target, then 38.2, then the 50, and price when it's fallen back will target these areas to the downside. Now Friday's bullish candle up pretty much took away whatever a lot of what happened for a full week. It took us above a price support and resistance here in the shape of the 38.2 February tracement area, and yesterday price still managed to stay above it. So ideally, as long as price can still stay above that 1566 mark in our intraday, we could see price building on that support and moving higher towards at least that 1575 or 1580 mark. A lot of consolidation in this area. Got to be well aware of it because that institution moving average is clearly a prior resistance through there in May, further resistance for a full week in June. So anybody who's purchasing in here will be well aware that or be aware that this is a clear resistance level, and we could see price consolidating and a chance for price to pull back. The other thing for that to cancel this would be a clear break above that. So we've got to look and see if there's any news announcements out there that's going to factor that. So look at your calendars to see what's happening for the remainder of this week, especially with sterling. Do we see anything out there that's really going to work towards us? We've got, well, today, construction PMI results. We've got net lending in individual month-to-month figures. Mortgage approvals. Not really going to do much in that sense, I don't think. Halifax, that's the month-on-month HPR results. We've got service PMI results. But Thursday and Friday is going to be very important. Thursday in particular because we have the official bank rate. That's going to be our interest rates. Are we expecting to see Merv King and his sidekicks actually dropped the interest rate. There's been talk that the IMF wants them to drop it to at least at the moment it's trading at 0.5%. It would likely be dropped to 0.25%. So it'll be interesting to see if they actually go ahead and do that. There was talk about it the last month, and they did not go ahead with it. So it could be interesting. So Thursday could be a date that we should all keep an eye on, because as we go into this, it could consolidate until further notice, until we get that interest rate announcement to see what happens. But also something that could really move price over here in particular is non-farm, especially in the US. Non-farm payroll, first Friday of every new month, we have the non-farm unemployment figures. Sorry, the employment figures, which is a very one to really be aware of in the States. It's a big factor. It does move the market a lot, and you get a lot of speculative trading prior and after the announcements and leading up to it. So that could also factor into price action over here. So if the US market had to have a really negative employment rate, non-farm payroll, then we could see the US the sterling gaining momentum on that. Or if interest rates to XYZ, we could see price doing exactly that and working on that. So be aware of it. We could see consolidation until those news announcements are made public. You can look at our intraday charts on the 4-hour. You can quite clearly see that price is trading in this consolidative range. A lot of support through here as well through the latter part of June heading into July. So as long as price stays above this 1566 here, especially on the 4-hour, then we could see price building on and reattempting these highs here to 1575, 5800. There's a lot of consolidation in this area here. You can quite clearly see that price has found support and resistance at this area. So people, you should be aware of that. All our moving averages are below us in order for buying. It's all great, but it's purchasing power against a major resistance level. It's far better just to rather, if this is going to be genuine purchasing power for the foreseeable future, so you'd rather get above this 1575, 15800 before we even look for any further sentiment to the upside. We don't want to ever be buying into major support and resistance, because what ultimately could happen is price moving against you and reattempting prior support and resistance levels to the downside. So over here, clearly, if this is to be genuine purchasing sentiment, rather stand aside, get a nice clear break above 15800 to confirm that price is still looking topside favorite. Otherwise, we could look for a bearish engulfing candle here to break below 1565, and we should be looking for potential targets to the downside, with ultimately our first target being 1550, and then below that towards the, if I can just bring it up here, let me just, the next target being roughly down here towards 15400, and then ultimately down to 1525, which we had the low here in June. Moving on to the US dollar Swiss franc, good old Swissy. You can quite clearly see my news announcement just recently that we know that 960 in particular, this one over here, roughly around 960, a major support and resistance level in the past. And you can see what price has been doing since we've actually been testing her recently, this level. If I'll just make it nice and thick, you can quite clearly see. If I just zoom out, you can quite clearly see that 2010 we saw a lot of support and resistance at this, consolidation at this area at 960, and furthermore through December, January, leading into this year, further hesitation or resistance at this level. Price moved away from it, still staying above the institution moving average and accumulating, and then making higher highs and reattempting the 960 recently, getting above it, but failing to actually find support or building support on the top side of this 960, which happened to be prior resistance. A breakout should have looked for potential new support, and then the upside being the outcome. However, this didn't occur because we had this bearish engulfing candle here at this major support and resistance level, taking price below this major area of support and resistance, and price moving to the downside on that. And if you take the lows over here, for example, and made to the upside here just before the start of June, you can see that 23.6 was an area where the 960 falls on. 38.2 would have been a target. Once we saw the bearish engulfing candle to the downside, that would have been a target 1. Target 2 would have been 50, which we saw price just just falling short of that level. 61.8 would have been a third target, and ultimately the 78.6 to the downside would have been our fourth target on this pair on our daily charts, which takes us back towards that 920, which happens to be prime support and resistance level here through April, but also the institution moving average. So at the moment now, you can see yesterday's candle finding support above that 38.2 at 950, and as long as she's trading above that, then we could see price reattempting these highs here at 960. Look at the CTC on either side. You can quite clearly see it's blue on either side, so the sentiment is still positive, but we are positive consolidative under a major resistance level. The longer we find resistance here, however, we could see price now looking more bearish outlook long term, and we could see price falling to these levels as I mentioned here long term. So it's imperative that if this is to be positive sentiment to the upside, 960 needs to be breached quite soon, support being found, and then we can target in particular 970, 975 to the upside as our first target, and look at 1000 above us as our ultimate target, because that's also a major support and resistance level, as well as a nice round number to the upside. There we go. So you can see quite clearly that the institution moving average, but you'll notice that the institution moving average has been pretty much steady all the way up. However, you can see price this institution moving average is starting to flatten out. The 20 period moving average over here being attempted a couple of times, but as long as we trade below that 960, ultimately the foreseeable future looks bearish for this pair. But it's imperative, if we're going to see another reattempt of these 960s, however, that the support over here that we've seen price beating out of there at the bottom, especially at 950, remains in play. Because if we see price moving below that, then ultimately that sentiment now intraday is going to look far negative. And if you look at your intraday time frames, you can see that price is generally starting to look negative. So if you look at your 4 hour, for example, you can see that 960 above. There we go. On a 4 hour, just make that 960, which happens to be our daily major support and resistance level. Notice up until this period that the institution moving average was below price. You can see price moving higher, and our CTC really giving us an indication we should be looking for buying sentiment to the upside. Since then, we've seen price pulling back, spending a bit of time, or spending more time below the 960 than above it. And in doing so, you can see that that price is now trading below the institution moving average. Okay, and as long as it maintains that outlook, then ultimately the institution moving average now will become a major resistance for this pair, and will continue to hold her to the downside. The CTC is still telling us it's buying purchasing power. That's only primarily because if you look at the daily, we have that 38.2 here at support at that 950 mark. So if you draw that line at 950 on our 4 hour and hourly, that will be your marker for the day. He's saying as long as price trades above that, and ultimately we should look for potential for upside. You can see swing highs over here over the 4 hour time frame to the upside, but just be aware that the institution average is there, just below price. It gets below that 950 and closes low on a nice bearish engulfing candle, then we should be targeting those other areas like the 50% here at just short of 940. So that's another area you can put in. 940 would be our ultimate target to the downside on our intraday time frame. So you can see how I'm setting myself targets, and it's imperative you have that. And that 940 happened to be prior support and resistance in the past. So very, very important. If this is still remain positive to the upside and reattempting these 960s, it needs to stay above 950. But we do need to see a break of that 960 quite soon to see if this sentiment long term is still positive. However, we could see a resistance here, and ultimately the outlook would be very, very bearish indeed, with these targets clearly to the bottom as definitely being ones to watch. Last pair of the day is US dollar Japanese yen, and just looking at this yesterday on analysis, I mentioned that we were trading below a major support and resistance level here at 80, and as long as price maintained that outlook, then overall sentiment was looking very negative, for the foreseeable future for this pair. We are, however, look at this, we're going into our 5th day now of consolidation on the underside of the 80. Look at that, and the underside happens to be a major support and resistance level. Quite clearly, the longer we've moved or stayed below this 80 mark, the more negative the outlook has. We have seen a bit of buying sentiment recently, and that's kept price on the attempting the 80, the underside of this 80. However, it has failed to actually break it and found support. We had a break recently a week ago, but this bearish engulfing of here wasn't the candle we're really looking for. We're looking for a buying sentiment candle, nice bullish engulfing to the upside, which have given us food for thought for potential targets to at least the 8150 to start with, and then moving up to that all important 8400 mark, which is where we saw price really coming in stuck at. So we'd have three particular targets to the upside if and when we saw price trading higher than 80. However, you can see price pretty much flat, consolidative on the underside of 80. So this is holding price below the waterline, which actually is a clear resistance, a ceiling level. So until such time as price is trading above that, we should be only looking for that negative sentiment. But you can see that on our intraday time frames, particularly, we've got a lot of consolidation here. There is definitely a consolidation range for this pair. So what you could do is you could just put a fib retracement area on this. So on your daily, take the low that we saw in February to the high that we saw here in mid-March, and just let it go. And you can use these fib retracement levels as particular targets. And if I just put one more in here, the one's missing is the 78.6. Let's just stick that one in. There we go. So as long as price remains below the 80, then we should be targeting 79.10, which happens to be our 61.8 retracement area of this overall move, and get below the 61.8, which will also mean a break of the institution. We should be looking for further selling, which would come quite quickly at 78.6% retracement down the bottom here, which happened to clearly show that we had a prior bounce of that. Break below that at 77.70. Well, we could look at these lows that we saw back here at 7600 or 75.50 in particular. We had the Japanese government intervening at that stage. So as it stands now, we have two parts of our overall trading strategy. However, we need four parts to be in favor to see it being a true signal. In this case, we have buy arrow, blue candles to confirm that, but we are still trading below a major support and resistance level, and hence the reason why the overall sentiment is still negative on this pair, and hence the reason why the CTC histogram on either side is remained red. So for this to be true buying, we do need to see 80 being breached, and breach quite quickly and quite aggressively with a nice big candle, engulfing candle in particular, and we should see the next three of the overall strategy going blue across the board, which will give us a genuine reason to buy it. Until then, this is looking this is bearish consolidative because we're on a bear trend, and it's consolidating at the underside of a major resistance level. So until such time as it breaks that level here above this 80, we should be looking for potentially intraday negative sentiment. That's it, guys. Hope you have a fantastic trading day. Please follow the rules of the strategy if you are using it. It's imperative that you do, and also very important that you back it up with sound money management. Very, very important. Also, please plot your major support and resistance levels. They will confer to you as to how much potential trading profit or how much chance there is of a genuine trade if you're trading your intraday time frames. I'll look at the daily and look at the weekly to give me an insight into what is likely to occur in my intraday time frames, because that will dictate how much profit or how much movement we're likely to see going forward. So it's important that you understand or are aware of these support and resistance levels and trend lines. Okay, they're there to guide you, and it's imperative that you are plotting them on your charts on a regular basis. Other than that, have a fantastic trading day. Please be aware we are going into the first Friday of the week, so we're going to get a lot of news announcements, especially on the US market leading up to that. We have all importantly on Wednesday and Thursday, we have all important figures out with interest rates, especially for the UK and with Euro. We had Australian last night where they left them untouched at 3.5%. They were actually brought down recently from 4.5%. Price is consolidated on the Australian US dollar, but be aware of it. It might be a factor for, especially against sterling against US dollar, if the interest rates are dropped as the IMF expected them to be not too long ago, to 1.25. So be aware of it, because that will definitely factor into price action as we go forward. Have a great day, and I'll see you first thing tomorrow morning. Until then, trade serenely.